Shri. Good afternoon. Today's day would be incomplete without asking you what's going on in pharma. Increasingly, we are getting very heavy risk of FDA, and that's the reason why people are scared, and that's why a derating is happening in.
I'm not sure whether we need to use the word derating. So the fact remains that pharma as a pack, as a sector, has done phenomenally well in the last 1 year. Probably may not be in the last 1 quarter, but before that. And you are right. And as you proceed further, what's happening is it's most of the Indian pharma companies. If you take the first top 6 companies, they're not small companies anymore. They are in size of more than billions of dollars in size. So increasingly, pharma exports is one of the important points. Naturally, the exclusivity, the one-offs, the USFDA impact of various inspection, etc., all is going to play a plot. So I think it will become more of the profitability, looking at what's going to happen abroad rather than the domestic story per se in the large pharma segment completely. And that's what we are seeing it. That's number one. Number two, so if you are going to see post 2017, you are going to have more challenges coming for the pharma sector to grow. Obviously, the kind of high earnings high discounting that some of the stocks will have, that probably may not get sustained as well as over a longer period of time, and that also will play a part on it. But my personal view, as long as good stories continue to emerge, you will probably see the market caps ranging into newer ones, and investors punish any company which has got suddenly some negativity coming in, especially if the valuations are stretched, and that's also happening.
Right. Earlier, whenever we used to speak or talk about USFDA, you would come out and say it's a company-specific issue. But they've got more, strict with their laws. They have got particularly, worried about what Indian pharma companies are doing. That's why sector does need to have that risk. Earlier, it was a very, very company-specific issue, but now it's become a sector risk.
Well, I don't think it is a sector risk. I still believe that it is a company-specific issue. Because once I'm not a pharma analyst, but having been in the industry for quite long, when we look at a lot of these pharma companies, what happens is, yes, USFDA expects you to have a good business practice and process which is in place. So a lot of the companies probably will have old plants which may not be having these specifications the way USFDA requires it. So there are challenges. I'm not saying that there are no challenges. So the entire sector needs to have a higher investment happening in a lot of these conditions and good business practices, etc., what terminology that USFDA uses in their 483s and whatnot. So you will tend to see that individual companies need to make these investments. And because all of them belong to pharma sector, the sector itself has to make.
Right, but you continue to believe that generic pharma, which has been in a sweet spot, will do well. If you get the company right, it can do very well still, despite the entire pharma sector rallying for the last 5 years, especially generic market companies.
See, Pankaj, here we need to be a bit careful about it. There are companies which have become from $1 billion to probably $5 billion. Now, can it become in the next 3 years to $15 billion? Question is, that's doubtful. I'm not saying that it can't become a $15 billion company. So you probably will not get the upside the way you have got the upside in the last 3 years over the next 3 years. So that is where, from a risk return perspective, people need to have a relook at what they are investing and the way it can proceed further.
Right. Let's talk about some other names. Metal Pack, how is it doing? If 2 months back I would have asked anybody which sector would be an avoid, it would be the metals pack. But Tata Steel has given fantastic returns. JSW Steel, Hindalco, Vedanta from the lows have given fantastic returns. Do you think now they are pricing in a recovery and that's why still they are not a buy?
See, the question is, Pankaj, you asked me, do you think that a few months back, if you had asked whether people would have recommended, my answer is I had not recommended even when it was when probably it was at a low. It has bounced back. Obviously, there has been a bounce back across the commodity space, including crude oil from the lows that it has reached. It had reached. So I don't think that is sustainable. So probably yesterday some of these stocks corrected. Today also it might have corrected. But the fact is, it becomes a complete trading stocks even now. I do not think the fundamentals warrant the kind of a price rise that you have seen across the markets for the demand growth that is there in the system. So I do not think that this upward momentum that you saw in a lot of those commodities that is sustainable in the current context.
Right. Let's talk about the steel space. Now, there has been some measures that the government has taken which has helped steel prices domestically to go up much more than what they have gone globally. Do you think these measures are sustainable, or eventually prices would come down quite fast as these measures expire in the next 4-5 months?
These measures are certainly welcome. That gives a breathing space to the industry and a lot of companies as well within that industry. However, this needs to get revisited in a period of 6 months. If my memory is right. Having said that, if a over a longer period of time, the demand has to sustain for the prices to recover to a great extent. If the demand improvement is not there, you will continue to see the commodities, especially even steel for that matter, continuing to be under pressure. So these measures of the government, MIP, etc., probably gives them breathing space, but that doesn't necessarily tell you need to take a U-turn in your investment decisions and start accumulating it at big time. Having said that, our analyst believes that JSW Steel is the best placed among all the steel companies in India given the current environment, because their cost of production and operating cost and the operating environment that they are in is probably best positioned.
Right. As far as these companies are concerned, some of them have huge debt. Despite the marginal increase that we've seen in steel prices or some of the other commodities, debt refinancing could be a big issue.
See, I did mention this, Pankaj. It's not only the question of debt refinancing. The question is, if the demand continues to happen, if the product prices goes up, you get an EBITDA improvement. Either you can still service your debt and continue to have without a problem, even if you have a higher debt. But if your EBITDA margins are not that high, you don't have contribution coming up, you cannot service your debt, then it's going to be a serious issue. So unless you see a significant increase in the demand, I don't think pricing power will be back there in a sustainable level to a certain extent, which could continue to put pressure on your ability to service debt.
Sri, after a 700-800 point rally, if the markets consolidate going into the earnings season, RBI policy, would you take it positively?
Definitely, I do take this as in a positive manner, because I think the downward pressure that we have been seeing from the global investors have subsided. To me, the big positives were the budget, where they have been able to hold on to the fiscal deficit targets that they are setting, which means that near term I don't see huge pressure coming on the currency, huge pressure coming from external side, and on the contrary, with those fiscal deficits being under control, probably there is even an opportunity for a 25 bips of rate cut, which has probably opportunity is there, especially when you look at inflation not running up, etc. So I think there are a lot of positive offshoots which has happened. So to my mind, I don't think the kind of pressure that the market was earlier, that scenario warrant or continues at this stage. Definitely, things have changed for the positive.
Right. Going into the earnings season, you track earnings very closely. Muted season is expected. Commentary would be more important. What is FY17 looking like?
Yes, definitely. I don't think that I'm much worried about Q4 because Q4 is going to be again quite subdued. I don't see much changes which will happen. I think FY17 is going to be more crucial. Probably 2 weeks from now, probably you may have data coming out of how the monsoon is expected to be. And after coming from two bad monsoons during 2015, 2016, 2017 is going to be much crucial for this. FI17 is going to be crucial. So monsoon data will be keenly looked at. That's number one. Number two, again, how the global economy is going to perform. If global economy is continuing to do reasonably well, then there is much more scope for it. And on the contrary, if you are expecting to see global economy probably slow down further, I think there will be more problems, more pressure for a country like India, especially in terms of the exports that it has got. Exports will come under pressure. So you may see some sectors, maybe even textiles for that matter, coming under pressure in terms of from an export perspective. So I think there are far too many variables which is there, which going towards FY17, which is going to determine which way the earnings are going to be. And in our own assessment, FY17 earnings, we estimate FY17 earnings to be somewhere closer to 470 rupees. 470 rupees for the Nifty as against 382 rupees for the current year. That 470 rupees for the Nifty, which is somewhere around 22.9% growth in earnings, a significant amount of that earnings, 32% has to come from banks or financial services in the Nifty. Now look at this, the banks, if you are going to see large slippages happening in fourth quarter and again in the first quarter of next year, etc. If you see large slippage happen, an increased level of provisioning required, then the earnings of a lot of these banks will get impacted as well. The good thing about it is now because market caps of HDFC Bank, Axis, etc. has gone up quite substantially, the PSU banks weightage which will have on the total Nifty has reduced quite considerably. So that's one big positive because we don't expect HDFC and Kotak, etc. Many of these banks, the private sector banks to come and probably surprise big time on the negative side. So that's going to be crucial, how the earnings of banks are going to be. And on the other side, for FY17 earnings again from FMCG. FMCG will be crucially looking at how the monsoon is turning out to be. So these are all things which we don't have an answer right now.
Right, but do you largely see private sector banks facing an issue as far as earnings are concerned? Because YOY 20%, they have clearly been driving the earnings so far.
I do not expect them to have serious problems. I do expect private sector banks to continue to have a much better earnings growth, momentum, everything when compared to the public sector banks.
Right. As far as autos are concerned, YOY growth has been not that great for Maruti. You think some of these names could recover? So something like a Tata Motors, something like a Hero, Bajaj could contribute in a meaningful way?
Okay, let's even look at it. At the beginning of the year, if I'm not mistaken, I think the earnings growth expectation on automobiles was closer to 21% for the Nifty. And right now when I look at it, that has become an earnings contraction of around 5.9%. Where did that significant change happen? I think the change happened from the consolidated numbers of Tata Motors to a great extent. So now, if nothing changes, probably for FY17, we are expecting to see a 33% earnings growth for the automobiles. So
right, as far
some numbers like on the global side for JLR will make a huge difference in the auto earnings number for the entire Nifty at a consolidated level.
Right. Also, about metals, the point that you made about PSU, that after falling so much, their weightage is very, very low. You think metals also, after the cuts that we have seen or the steep cuts that we have seen so far, you think now there is an upside bias?
See, metals today constitute 3% of the weight of the Nifty. So even if they have got 100% growth, 200% growth, it's coming from a loss. So it could be infinite growth kind of scenario. I don't think significantly it is going to alter the Nifty earnings growth to that extent. I think Nifty earnings growth is going to be to a great extent determined by banks, which is still closer to 29.3%, IT, which is 17.4%. Then you have FMCG, which is 10.4%. So IT is expected to have a steady growth. Then banking, if it improves quite dramatically, which I think it will, that will be the big turner in terms of earnings growth for the Nifty.
Right. Just a word on, some mid-cap names. Mid-caps have done very, very well. You think select mid-caps will continue to do well? Because, they don't need the economy to recover or, major earnings to recover, liquidity to be very high to grow. So you think select mid-caps would continue to do well despite 2 years of outperformance that we've seen by the index?
I think there will always be select stories which will continue to do well, and that story I don't think will undergo any change. It will continue to happen. Even there, within our universe of top picks, we have mid-cap picks which we continue to like, and that's across sectors. It's not related to one sector alone. You have got Hexaware and NIIT in IT. You got Jubilant Life in pharma. You got Sadbhav and Ashoka Bilkon in engineering. You had JK Lakshmi Cement in cement. You got SpiceJet in airline. Capital First in terms of financials. You may have VRL Logistics in the logistics space. So these are all some of the topics that we have, and this reflects not into any specific sector. It is across the sectors.
Right. Sri, thank you so much for taking out time for us. Always a pleasure.